This week, we witnessed the biggest short squeeze in 6 months that mirrors the mid September rebound. While stocks reached record highs, perhaps the biggest news was the massive explosion higher in cryptos, with Bitcoin up over $1,200 on the day, the biggest daily gain for Bitcoin since April. We're also approaching the 90th anniversary of Black Monday, which was, if you remember, you probably don't, you weren't around, was Monday, October 28th, 1929. But don't look at the calendar because you don't want to jinx the markets, because this Monday will be October 28th, 2019. And at the same time, Robert Shiller says, and I quote, "I see bubbles everywhere. There's no place to go. You just have to ride it out. You invest even though you expect the price to decline." Well, hopefully not at this channel. But if you don't know Robert Shiller, he's the Yale professor that famously predicted the 2000 stock market crash and the 2007 crash of the housing market. So, since everything is still awesome, let's take a look at the charts. And we're checking into the iShares Russell 2000 ETF. The symbol is IWM, and the close on Friday was 155. And this is the 20-year monthly chart on the Russell 2000. We looked at it last time, and I want to revisit this because my thesis is that if the Russell 2000 can bottom, base, and head higher, that means the other indices are probably powering ahead because the Russell was the lagging indicator. And if the Russell's able to turn and head higher, I think I'm going to win that gentleman's bet between me and the Axeman. Now, looking here at the chart, it looks like we've been within this channel, say, for the last year or so. But let's go take a look at the MAC and see what that shows. Fast line came through, and it looks like it's trying to bottom. It's tried once, twice, and I think it's going to be this third time here. Maybe that's going to be the charm. In my opinion, this is trying to base here in this area. It's going to close in on that slow line and hopefully can cross through as it did there in the 2015-2016 timeframe. We're still above that zero line, so we still have some strength. Moving on here into the histogram, you can see that improvement there as well. Still have a little ways to go, but I think things are looking positive. Into the price rate of change, this is kind of an ugly basing bottoming here, but look, if that's what it is, I'll take it. Not all that dissimilar from 2015, 2016. We still have some time to go, but I think it's going to happen. Relative strength, we're at a moderate 52.33. We had that bottom there, 2018. It's improved since then, and it looks to me like it wants to base in that area near the 50 line or midline. So there's some decent strength. Same thing here in stochastics. Bottoming, basing near that 50 or midline. Looking at volume, looks fine. And then the Williams had that bottom here, had the basing here, and now we see that the Williams is reaching up into that overbought territory. But that the Williams oftentimes leads the other oscillators and can lead the price chart. So if the Williams is heading on up, I think the rest of the oscillators will too soon enough, followed by the price chart. So go back up to the price chart. We have been trading sideways for quite a while, that whole year. But I think things will change. It's still going to take maybe a month or two or a quarter, but I still think we're going to be heading on up. And if we head on up, that means that the window of getting good prices is going to be closed. I would say within the next 3 months or one quarter. So pay attention. And for today, that's ChewDog Charts. Thank you.